Welcome back. Markets this morning are fractionally lower. Take a look at futures indicating a decline of about 100 at the Dow on the Dow at the open of trading. Futures also indicating the Nasdaq down 77. This after the Dow posted its first record close of 2025 on Friday, when Fed Chief Jay Powell signaled he is, in fact, open to cutting interest rates next month and policy is shifting. In that final Jackson Hole speech, Powell said that the labor market is, quote, in a curious balance and risks are rising. Watch this.
Our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Monetary policy is not on a preset course. FOMC members will make these decisions based solely on their assessment of the data and its implications for the economic outlook and the balance of risks.
So the futures market is now pricing in an 87% chance that the Fed cuts rates at next month's September meeting. Joining me now is the former chairman and CEO of Chrysler, former chairman and CEO of Home Depot, and the founder of Accelerate, CEO there as well. Bob Nardelli back with us. Bob, great to see you. Thanks so much for being here. What was your reaction to the Jay Powell speech Friday?
Yeah. Well, Maria, thanks for having me, and a great interview earlier this morning. My reaction to that is the market, the street, is thirsty for Chairman Powell to make this kind of a change. Now, I took a poll of a lot of directors at a board meeting last week, and everybody thought it should be a half a point, not a quarter. But given the angst between Chairman Powell and the president, I think that's probably all we're going to get at this time. I also was kind of shocked that one of the Fed board members said, well, we shouldn't worry about interest rates relative to our debt. And that's what businesses do, Maria. I mean, any chance we get to refinance and change our interest on debt, and the United States is a big business. So I'm kind of surprised that they aren't sensitive to that issue, Maria.
Well, that's very interesting that you picked that up, and I agree with you. I think in the scheme of things, looking at the overall broader, macro story, you've got to consider debt. Right. But look, the Fed has its mandate. The mandate is employment and inflation, Bob. And so, that's one of the reasons, I guess, President Trump was pushing the chairman to cut rates, because it could actually help the U.S. The president said it's about $350 billion that you're impacting just from 1 point in terms of a move in rates, Bob.
Yeah, it's proof positive. The facts are there, Maria, for a bigger adjustment to help the United States, to help our country really reduce the amount of money we're paying versus investing it in defense, in energy, and in infrastructure. So it's a common sense trade-off. I just don't understand, other than the friction between Powell and the president exists today. It's just not. It doesn't make sense.
Yeah, that's too bad. I want to get your take on crypto, especially Ethereum. And Kenny, maybe you want to jump in here, because Ethereum this morning is pulling back. But, starting the week pulling back, but it hit an all-time high over the weekend, Bob. We talk a lot about Bitcoin, but now you're looking at Ethereum really be on fire. The second largest crypto wiped out Friday's Fed-fueled gains. Bitcoin also pulling back. Broad sell-off triggered hundreds of millions in forced liquidations across Ether and Bitcoin. What do you make of this move in Ethereum recently, Bob?
Yeah, it's very interesting, Maria. When I had our $400 million back, we looked at investing in a business that was based on Ethereum, and we got a little nervous about it, but boy, it sure has performed. And again, I think you're going to see this yin and yang that goes ins and goes outs on crypto as it starts to reestablish itself. Certainly the president's support of it has been very helpful. So I think there's less apprehension about it, but it's still going to have its highs and lows, Maria. It's not as stable as some of the other things that one might invest in. And there was an article in the Wall Street Journal over the weekend about investment in equity and in Treasury has outperformed investments in some of these alternatives like hedge funds. So again, I think it's a switch towards a little more conservative investment philosophy. among many of us today, Maria.
Yeah, but Kenny, jump in here because Ether is up better than 40% so far this year, topping Bitcoin's move. Bitcoin's up 25%. The latest rally for these digital currencies, partly due to this new wave of companies issuing shares and debt to stockpile the two tokens.
Right. So listen, I'm very bullish on crypto. I'm bullish on both Bitcoin and Ethereum. I'm not bullish on the rest of them. There's too many of them to pay attention to. I think those two are the ones that really are going to be in the focus. So while I agree with Bob that they can be volatile, and we certainly know that they can because they've been all over the place, I think long term you have to have some exposure to both Ethereum and Bitcoin because I do think that's where we're moving towards. And look, to your point, all these companies are placing bets, right? They're all in this game. They're all stocking up on Ethereum and Bitcoin. I think that's a very positive sign.
Actually, venture capitalist Peter Thiel has been piling into Ethereum as well, saying that there's underlying value there. Real quick, Bob, before you go, I got to get your take on the U.S. government acquiring 10% of Intel. What do you think about that, Bob?
Yeah, it's interesting. You know, we try to keep the government out of selecting winners, right? We saw this with the Obama administration, and it was a colossal failure. So I hope that the Trump administration are making the right thing. Now, if you think about the market, certainly chips and technology is a real winner, Maria. But let me focus on something. You know, we talk about data centers, but data centers without energy is going to be a big issue. It's what hurt EVs. That's why GE Vernova is doing so well. $600 a share. That's the old GE Power System, which I'm very familiar with. But look at $165 billion market cap. Put your money on energy and industrial.
It's a great point. We need energy to fire up the data centers. Bob, always great to see you. Thank you, sir. Bob Nardelli joining us. Stay with us. We'll be right back.